The year is 1720. London is not merely a city. It is a furnace burning with a new and volatile fuel: speculation. In the smoky, crowded labyrinth of Exchange Alley, dukes rub shoulders with dustmen, and ladies of the court trade secrets with street merchants. They are all infected by a singular fever, a belief that the laws of economics have been suspended by the sheer force of British will. Standing at the precipice of this madness is Sir Isaac Newton. He is 77 years old, the master of the Royal Mint, and the greatest intellect the world has ever known. He has calculated the weight of the sun and the trajectory of comets. He has imposed mathematical order upon the chaos of the universe. Yet, he is about to learn that while he can calculate the motions of heavenly bodies, he is utterly defenseless against the madness of people. Now, let us open the archives and dissect the anatomy of this failure. To understand the tragedy of Newton, we must first understand the architecture of the trap. The South Sea Company was not a business in the modern sense. It was a mechanism of statecraft disguised as a commercial enterprise. Britain was drowning, weighed down by the heavy anchor of war debt, nearly £50 million owed for conflicts that had long since ended. The Crown was desperate for liquidity. Enter the South Sea Company, a grand venture that proposed a solution as elegant as it was deceptive. They would absorb the national debt. In exchange, the government granted them a monopoly on trade with the Spanish colonies in South America. On paper, it was a masterpiece of financial engineering. In reality, it was a hallucination. The trade routes belonged to Spain, a hostile power that had no intention of allowing British ships into their ports. The company possessed no fleet, no goods, and no legitimate revenue stream. It was a shell, a beautifully painted facade erected over a vacuum. But in the dim light of the coffee houses where stocks were traded, facts were irrelevant. The narrative was the commodity. Newton, a man whose life was dedicated to the pursuit of absolute truth, was surprisingly susceptible to this fiction. We often assume that genius is a shield against folly, that a mind capable of deriving calculus would be immune to the crude seduction of a bubble. This is a dangerous assumption. In the spring of 1720, Newton looked at the South Sea Company and saw what everyone else saw: an upward trajectory that defied gravity. He entered the market with the precision of a scientist conducting an experiment. He purchased his initial shares, watching the numbers climb. The stock moved from £128 to £175 in a matter of weeks. The air in London was thick with the electricity of easy money. It was an alchemical transformation. Paper was turning into gold before their eyes. When the stock hit a peak in late April, Newton, displaying the discipline that had defined his career, decided to exit. He sold his position, pocketing a profit of roughly £7,000, a fortune that would be worth millions today. It was a rational, calculated victory. He had engaged with the beast and walked away unscathed, his pockets heavier. Logic had prevailed. He looked at the market, which was becoming increasingly detached from reality, and reportedly stated that he could calculate the motions of the heavenly bodies, but not the madness of people. He was content. He was safe. But the illusion was far from over. In fact, the machine was only just beginning to spin. As summer approached, the South Sea stock did not correct itself as physics would dictate. It accelerated. The price surged past £300, then £400. The madness Newton had dismissed was not collapsing. It was minting millionaires. Friends of far lesser intellect were becoming titans overnight. The rational exit that Newton had made began to look less like wisdom and more like cowardice. The silence of his ledger began to scream at him. He was out of the game, standing on the shore while a ship made of gold sailed toward the horizon without him. The seed of envy had been planted, not by failure, but by the unbearable spectacle of others' unearned success. The summer of 1720 descended upon London like a fever dream, heavy with humidity and hysteria. The city had ceased to function as a capital of commerce and had transformed into a carnival of speculation. The rationality that Newton held so dear was being dismantled, brick by brick, by the manic energy of the crowd. It is a peculiar psychological torture to watch the fool grow rich while the wise man stands still. In the logic of the market, caution is indistinguishable from failure. Newton watched as the stock climbed past £500, then £600. The £7,000 profit he had secured in the spring, a fortune that should have satisfied any reasonable man, began to feel less like a victory and more like an insult. The madness he had ridiculed was outperforming his intellect. Here, the archives reveal the fracture in the human mind. We can endure failure with stoicism, but we cannot endure the success of the undeserving. By July, the pressure became insurmountable. The gravitational pull of the herd was stronger than the laws of physics. Newton, the man who had defined the very concept of inertia, could no longer remain at rest. He re-entered the market. But this time, there was no caution. There was no calculated testing of the waters. Driven by the agonizing fear of missing out, Newton poured not just his previous winnings, but a substantial portion of his life savings back into the South Sea Company. He bought in at the dizzying height of the mania, purchasing shares at roughly £700. He was no longer an observer. He was a believer. He had abandoned the observatory for the casino. For a brief, intoxicating moment, the gamble appeared to pay off. The stock continued its ascent, driven by a mechanism of pure fraud that the public mistook for innovation. The directors of the South Sea Company had engaged in a tactic that would become a hallmark of financial ruin for centuries to come. They were lending money to investors to buy their own stock. It was a closed loop of liquidity, a serpent eating its own tail to sustain its bulk. The company was not generating value. It was generating leverage. The price surged to £1,000 per share in early August. The valuation of the company was now effectively equal to half the value of all the land in England. To a mathematical mind, this equation was impossible. It was a paradox. But Newton was no longer looking at the math. He was looking at the horizon, blinded by the golden glare of the bubble. London was drunk on the vapors of this phantom wealth. Servants arrived in carriages. Aristocrats mortgaged their ancestral estates to buy more paper. The bubbles multiplied scam companies sprang up overnight, promising to invent perpetual motion machines or to import walnut trees from Virginia. One company famously advertised itself as a company for carrying on an undertaking of great advantage, but nobody to know what it is. People invested millions. The critical faculties of an entire nation had atrophied. Then, the air changed. It did not begin with a bang, but with a whisper. In the gilded boardrooms, the insiders, the directors, and their political patrons knew the truth. They knew the vaults were empty. They knew the trade with the Spanish colonies was a fiction. Quietly, while the music was still playing for the public, they began to exit. They sold their shares, converting the inflated paper back into tangible gold and land. They were securing their lifeboats while telling the passengers that the ship was unsinkable. The first cracks appeared in late August. The price wobbled. It dipped from £1,000 to £900. In a rational market, a dip is a buying opportunity. In a bubble, a dip is a death knell. A bubble relies entirely on the collective belief that the price will go up forever. The moment that belief is punctured, the physics of the market invert. There is no gentle descent. There is only terminal velocity. By September, the sell-off had mutated into a panic. The descent was violent. The stock plummeted from £800 to £700, smashing through the floor of confidence. The leverage that had fueled the rise now accelerated the fall. Investors who had borrowed money to buy shares at the top were suddenly insolvent, forced to sell at any price to cover their debts, driving the price down further in a catastrophic feedback loop. Newton was trapped in the wreckage. We can imagine him in his study, surrounded by charts and papers, paralyzed by the speed of the collapse. The intellect that could calculate the precise return of Halley's Comet was useless against a market that moved on pure, animalistic terror. He held on. He fell victim to the sunk cost fallacy, the desperate hope that the market would correct itself, that rationality would return. But the market has no memory and no mercy. It does not care about your genius or your reputation. The price crashed through £600, then £500. By the time the leaves began to fall in London, the stock was trading below £200. The wealth of the nation had evaporated like mist. The South Sea House, once the temple of the new economy, was now a tomb. The carriage rides stopped. The suicides began. The dream of infinite leisure was replaced by the cold reality of debt. Newton had not just lost his initial profit, he had lost the principle. He had bought at the summit of the mountain and ridden the avalanche all the way to the bottom. The aftermath of the crash was not merely financial, it was existential. The South Sea bubble did not just bankrupt bank accounts. It bankrupted the Enlightenment ideal that reason could conquer all. When the dust settled in the winter of 1720, the ledger of Sir Isaac Newton revealed a catastrophic loss. He had vaporized roughly £20,000, a sum equivalent to nearly £4 million in today's currency. It was the bulk of his life's accumulation, the tangible reward for decades of service to the crown and to science. But the monetary loss, devastating as it was secondary to the psychological wound. Newton was a man who had built his identity on the pillars of logic and foresight. He was the high priest of the rational universe. Yet, he had been seduced by the same primitive impulses as the common gambler in the alley. He had been outsmarted not by a rival intellect, but by his own biological hardwiring. The madness of people was not an external force to be observed through a telescope. It was an internal defect lurking within his own blood. The public reaction was merciless. The press savaged the directors of the South Sea Company, demanding their execution. Parliament launched investigations, uncovering layers of bribery that reached the highest levels of government, including the king's mistresses. But for Newton, the shame was private and profound. He banned the words South Sea from being spoken in his presence. It became a taboo, a ghost that haunted the corridors of his mind. He spent the remainder of his years at the Mint, pursuing counterfeiters with a renewed, almost fanatical zeal. Perhaps, in hunting down those who forged false coin, he was trying to atone for his own sin of believing in false value. The lesson of Newton's financial ruin is not about the volatility of markets. It is about the fragility of intelligence. We often mistake IQ for wisdom, assuming that smart people make smart decisions. The South Sea archives prove otherwise. Intelligence is a tool for processing information, but it is not a defense against emotion. In fact, intelligence can be a liability. It allows us to rationalize our greed, to build complex intellectual justifications for simple, primal desires. Newton convinced himself that the paradigm had shifted, that he saw something others missed, when in reality, he was simply following the herd off the cliff. The bubble revealed that the market is not a mathematical equation waiting to be solved. It is a mirror. It reflects our vanity, our envy, and our desperate need to believe in magic. Newton spent a lifetime decoding the laws of the universe, proving that action and reaction are equal and opposite. But he forgot the most fundamental law of human nature: greed, when unchecked, creates a vacuum that no amount of genius can fill. Now, let us close the archives. We leave Sir Isaac Newton not as a god of science, but as a man flawed, mortal, and poorer for his hubris. His story serves as a stark memento mori for the modern investor. We stand today in markets that echo the same rhythms of 1720, surrounded by new technologies and new promises of infinite growth. We believe we are smarter. We believe we have better data. But the mechanism remains the same. The charts change, the assets change, but the animal spirits do not. When you look at a rising line and feel that pull in your chest, remember the man who weighed the earth but could not weigh his own ego. Remember that in the end, gravity always wins. Because in the ledger of history, every debt must eventually be paid.